In early 2017, Papa John's was enjoying steady growth, a high-profile partnership with the NFL, and rapid international expansion. Later that year, Papa John's reported its 28th consecutive quarter of positive U.S. same-store sales. But its winning streak didn't last. By 2018, Papa John's future looked bleak. North America's same-store sales growth went negative in the fourth quarter of fiscal year 2017, and sales growth stayed negative for 6 straight quarters after that. Not to mention the fact that it's been losing the pizza wars to Domino's, Pizza Hut, and Little Caesars in recent years.
Papa John's has, opted to not necessarily compete on price, but to compete on something different, which is quality. Has that hurt them? I think it has, because I'm not sure that they've really won yet on the quality positioning.
So what went wrong? A lot of the problems can be traced back to Papa John's founder, John Schnatter. He blamed his company's weak sales numbers on declining NFL viewership, which ultimately cost the pizza company its sponsorship deal with the league. Then, in July 2018, Forbes broke the news that Schnatter used a racial slur on a conference call. That same day, Schnatter was out as chairman, and the company's fortune went from bad to worse. Shares of Papa John's tanked, along with sales at U.S. stores open for more than a year. Customer sentiment towards Papa John's also fell. But Papa John's is trying to rebrand and rebuild. There's little trace of John Schnatter left at the company he founded in his early 20s. There's new management in place at the C-suite. Plus, the company is partnering with third-party delivery services and introducing new products. Restaurant experts say it's still too early to tell if the new strategies have been effective, but many in the restaurant business are optimistic that the turnaround will stick. John Schnatter started working in the pizza business at age 15 as a dishwasher at his local pizzeria. 7 years later, in 1984, he started selling his own pizzas out of a remodeled broom closet in his father's bar. His venture was successful, and 1 year later, Schnatter opened the first standalone Papa John's in Jeffersonville, Indiana. The company grew fast. By 1991, there were 100 Papa John's restaurants. Less than a decade after launching, Papa John's went public. By 1994, there were 500 restaurants. Franchising was always key to Schnatter's growth strategy, and many early franchisees were actually people he knew personally. Papa John's system-wide restaurant sales topped $1 billion in 1998, and it started opening international stores that year too. Competitor Pizza Hut, which held the #1 spot in the U.S. pizza market at that time, started to sense a threat. Domino's, Pizza Hut, and Little Caesars were well established in the U.S. pizza market when Papa John's came onto the scene in the 1980s. Pizza Hut was the fastest growing chain, capturing a quarter of the pizza restaurant industry in 1995. While Domino's focused on delivery, Pizza Hut wanted people to dine in. In addition to pizza, it had a salad bar, pasta dishes, and sold alcohol. Pizza Hut also prioritized innovation. Its head of marketing in the 80s declared Pizza Hut would release one new product every 6 to 8 weeks. Domino's set itself apart on speed. It promised to deliver a pizza to your door in 30 minutes or less. Little Caesars attracted customers with hits like its everyday $5 pizza deal. Papa John's planned to stand out in a crowded market by offering fresh ingredients. To do that, Papa John's focused its advertising on the idea that its pizzas were of a higher grade than its rivals. Some of these ads directly targeted Pizza Hut. In one commercial, Papa John's explained that its tomato sauce supplier used a fresh pack method, while Pizza Hut made tomato-based paste and thinned it with water. In another ad, Papa John's claimed its dough was better than Pizza Hut's version. But the competition fought back. Pizza Hut sued Papa John's for false advertising over Papa John's claim that it used better ingredients for better pizza. A court of appeals ruled that Papa John's slogan was puffery, which means exaggerated advertising, blustering, or boasting that a reasonable consumer wouldn't rely on. So Papa John's got to keep using its better ingredients, better pizza ads. It worked. Customer satisfaction surveys showed that Papa John's ranked above Domino's and Pizza Hut from 1999 up until the start of the Great Recession in 2008. But later, during the financial crisis, none of the big pizza companies were immune to the fallout. Same-store sales at Papa John's, Domino's, and Pizza Hut were flat or negative in 2009. Domino's, which had sacrificed quality in favor of speed, released an ad in 2009 acknowledging that its pizza tasted bad. Pizza was also losing its reputation as a cheap meal because the price of cheese and other ingredients kept climbing, which meant that pizza prices were rising. Domino's and Pizza Hut turned to food deals and refreshed menus to try to boost sales, like Domino's 2 items for $5.99 each, or $5 pizzas at Little Caesars. Papa John's struggled to offer competing deals. It didn't sell enough pizzas to support razor-thin profit margins on promotions. Franchisee profitability started to suffer. Instead of just selling pizza, Domino's and Pizza Hut menus expanded to include sandwiches, pasta, and dessert. Papa John's, on the other hand, kept the focus on pizza. Schnatter feared that trying to make other products would affect the quality of its core menu item.
They just haven't done much menu innovation. They've been sticking with a product that is done well over the years for them, but the quality perception gap has narrowed between them and the competition, mainly because the competition's gotten better.
After the recession, Domino's leaned hard into tech, and it worked. In 2008, it was the first of the Big Four pizza chains to roll out a tracker that let customers follow the progress of their order. Since then, Domino's has introduced voice ordering and zero-click ordering on its app, and even experimented with drone deliveries in New Zealand. While Domino's focused on technology, Papa John's spent the 2010s trying to set itself apart on the basis of using high-quality ingredients. But Domino's and Pizza Hut overhauled their products too, and started offering higher-quality pizzas. Papa John's premise of better ingredients didn't resonate as strongly with consumers as it once did.
People, I think, want quality pizza, but they also, when they order, don't make a decision based on whether it's a clean label ingredient or clean label pizza. And so that strategy did not work.
In fiscal year 2017, Domino's moved into first place in the pizza wars for the first time, according to rankings from Nation's Restaurant News. Domino's passed Pizza Hut in market share in 2017, too. In other words, Papa John's competed with the big chains, but it never hit the #1 spot, according to any of the big metrics. Domino's had delivery, Pizza Hut had cornered the dine-in audience and offered variety, and Little Caesars offered great value. Papa John's relied on superior quality and high-profile advertising. It also leaned heavily on sports sponsorships to set itself apart from the competition. Papa John's was the official pizza of the NFL and MLB, in addition to individual teams from both leagues. Papa John's 2010 deal to be the official pizza sponsor of the NFL was the largest deal in Papa John's history, but those relationships soured. In November 2017, Schnatter criticized the NFL's reaction to football players who protested during the national anthem. On an earnings call with analysts, Schnatter said declining viewership of the NFL negatively impacted Papa John's same-store sales.
Without a great deal of data at his disposal, he said plunging viewership of NFL teams, and this was in 2017, has created a problem for me because our sales are going down. Well, there were a number of reasons his sales were headed down. The National Football League played a minuscule role in all of that.
2 weeks after blaming the NFL for slumping sales, Papa John's posted tweets apologizing for Schnatter's comments. But investors weren't happy. The company's stock dropped more than 12% over those 2 weeks. Schnatter stepped down as CEO on January 1st, 2018, and longtime executive Steve Ritchie became the new head of Papa John's. Schnatter stayed on as the company's chairman. In February 2018, Papa John's and the NFL issued a statement ending their partnership, saying it was a mutual decision. 1 day later, Pizza Hut became the official sponsor of the NFL. Papa John's and John Schnatter both declined CNBC's request for an on-camera interview. This moment marked the end of Papa John's strong growth.
The brand's perception went negative quickly among a lot of consumers on social media, which was a good proxy for overall demand for the brand because their sales trends fell off a cliff right after those comments.
Starting at the end of 2017, Papa John's North America same-store sales started dropping dramatically. In the fourth quarter of 2017, same-store sales were negative 3.9%. By the third quarter of 2018, they had plunged to negative 9.8%. Things got even worse for the company in July 2018. months after Schnatter had stepped down as CEO. Forbes reported he'd used a racial slur on a media training conference call in May of that year. In a statement emailed to Forbes, Schnatter confirmed the incident. "I apologize. Simply stated, racism has no place in our society." The same day he issued this statement, Schnatter resigned as chairman of Papa John's, leaving the company entirely. But he didn't go quietly. Schnatter filed lawsuits against the company he founded in an effort to regain control. Schnatter's resignation wasn't enough. The company prohibited him from talking to the press and removed him from advertising materials. Papa John's sales growth was negative for the 6 consecutive quarters from March 2018 to June 2019. Wall Street seemed uncertain whether Papa John's could recover. From November 2017, when Schnatter made the NFL comments, to July 2018 when he resigned as chairman, shares of Papa John's slumped 13.8%. While Domino's enjoyed positive sales growth of 23% in fiscal year 2018, Papa John's sales declined 11.8% from 2017 to 2018. Customer loyalty at Papa John's slipped too. From 2014 to 2019, Domino's ranked number 1 in customer loyalty, according to an index from Brand Keys. Papa John's slipped from number 2 in 2014 to number 4 in 2019. Some experts speculated that a sale of Papa John's was imminent and questioned whether the brand would survive. But the tide began to turn for Papa John's in 2019. Activist hedge fund Starboard Value took a $200 million stake in Papa John's in February 2019. Starboard's big cash infusion was a vote of confidence for the company. It thought a turnaround was possible. New faces joined the board, including NBA Hall of Famer Shaquille O'Neal. The company was also able to finally put to bed its very public and long-running feud with its controversial founder, John Schnatter. In March of 2019, Schnatter agreed to dismiss the 2 lawsuits he filed against Papa John's if the company appointed a board member that both sides were happy with. In August 2019, seasoned restaurant executive Rob Lynch took over the CEO job from 2-year veteran Richie. Lynch came to Papa John's from Arby's, where he helped the sandwich chain undergo its own turnaround. He helped lead Arby's to record-breaking sales and profits in 2018. The board of Papa John's is hoping he can do the same there. Lynch has a strong background in brand marketing and product innovation. He spent his career working with fast food restaurants and consumer packaged goods companies like Heinz, Procter & Gamble, and Taco Bell. Analysts say it's too early to tell whether or not the turnaround plan he's leading will work. But there are indicators that Papa John's could return to higher growth. In the third quarter of 2019, Papa John's reported its first increase in same-store sales in 2 years, but analysts say it wasn't all that difficult to beat. There are signs that Papa John's will experiment with new product ideas, a move that companies often turn to in order to stay relevant with consumers. In November 2019, Papa John's announced a new garlic parmesan crust, marking the first time the brand has changed its pizza dough in company history. Papa John's has also embraced third-party delivery services to increase productivity, unlike its competitor Domino's, whose CEO said it has no plans to partner with third-party delivery apps. Lynch is also shaking things up in the C-suite. In November 2019, the company announced the departure of its CFO and CMO, among others. And Lynch is adding a new chief commercial and marketing officer to oversee menu strategy, product innovation, and marketing, plus a chief people and diversity officer. Lynch says he plans a bigger role for board member Shaq.
We think that the turnaround is really just kicking into gear.
For decades, one man was the face of Papa John's. John Schnatter's image covered the company's branding from its TV commercials to pizza boxes to social media pages.
John just had a huge ego, and he wanted to be on national television. And he wanted his name linked with the brand, linked with the company, linked with the image. And it was literally his picture that accompanied the brand and its advertising.
But there's been a dramatic change to Papa John's branding since Schnatter was forced out. Today, ads for the pizza company feature franchisees, general managers, and, of course, Shaq. At the peak of Papa John's PR crisis, it looked uncertain the company could recover. Analysts issued sell recommendations and dropped earnings projections. Same-store sales plunged for 7 consecutive quarters. Today, it's a mixed forecast for what comes next for Papa John's. In 2019, the total sales gap between Little Caesars and Papa John's widened from the previous year, according to Nation's Restaurant News. But according to Wall Street, things are looking up. Since Lynch was appointed in August 2019, shares of Papa John's have risen about 37.5%. The recovery at Papa John's is happening, even if it's not as fast as some have hoped.